Good morning. This is Giles from Divergent Trading, and this is the first video to accompany the blog that I've been doing on the S&P Emini review and plan. So basically, just normally what I do when I'm reviewing, I do a top-down look initially, and then a sort of more granular bottom-up look at what's been happening on the day. So if we have a quick look at the weekly chart, we can see this week we have made a new high, but we are failing to hold above last week's close, and we're actually been dipping down into the prior week's close to that as well. We are obviously clearly in a heavy downtrend from the last few weeks, and just making a 50% pullback of this impulsive move, as we can see on the daily chart, literally to the one tick above the 50% pullback of that move we had on Monday. Now, also, sorry, just on the daily here, we can see this range that we've had since last August low and the low we made last month. We can see value here. We've tried to pull back into value, but so far still rejecting the lower end of this. We can see this 1920 area has been a sort of high volume node here on the composite profile, and if we look on the custom profile, this whole area here is a sort of separate distribution to this upper zone we had a breakdown from. So really for me, this line in the sand here, this 50% pullback, is very important of this impulsive move. Once we start to break above that again, then I think we've got a good chance of attempting to push through this breakdown area from this is 1974, this breakdown point here, and then try and push back up into this area. Although that's going to be, I think, hit with some serious resistance, but even so, once we are above here, that's going to start to force shorts out and see some forcing action on the upside, and maybe towards this composite low volume point here around 1980. Now, just to look on the shorter charts now. On the right hand side, I've got a 60-minute chart for Globex, and these are anyone that follows the blog, and thanks very much for following the zones that I put on every day. I'll go through how I put those on in another video, but for today we can see what happened yesterday and how the reaction was at the zones. This Globex chart here is the hourly, and I've also plotted in custom profile from last week, where we can see the balance from there. I think it was actually 6 days of balance there, and the VPOC was 1890, which was a major reason this zone was in here to start with. Now, this upper balance we had has clearly been rejected. Yesterday's plan, if I just bring that up, now I was expecting, or rather, if we look at the chart here, this is it yesterday. This zone, the expectations here were either bounce off this zone, this 09.5, 11.5 zone, back up again, or move up into the bull bear 31.33 area and face potential resistance, or carry on through. Or if this 09.5, 11.5 zone failed, then we're going to go back into the top of this breakout area, 0275, 0475, potential reaction there, and then if that fails, rotation down into the VPOC from the prior week. So as you can see, if below the 0275, expecting to move back down to 1890, potentially lower. Okay, so really what we got was this move. Yeah, the 0975, sorry, 095, 1150 area did not hold for long. We had an open drive pretty much straight out of the blocks. Went down into the next zone, did have a reaction back up to the top of this zone. So, and this was actually an area I did look to try and trade. Now, depending on the location, this was really motoring against you at this point. So momentum was not on your side. So if you are trying to buy this sort of area, well, I'm really trying to get the best price I can. So I'm really waiting for this zone to either be breached or hold, and see some sign of some maybe possible divergence in cumulative delta, shifting tick, that type of thing, before taking a long trade. And you know, from 1903-ish, back up to the overnight low, 09.25. You know, you're talking 6 points there. If you're taking 1 or 2 points of risk, you're looking, well, 3R type move. So, you know, nice potential trade against as a counter trade, counter trend move, but still valid in that area. And because the momentum was so negative, this prior zone of support, you know, is also next day resistance area once it's been broken through. So that also is an area to potentially short. I didn't take the short, but I wish I had done. That would have been a nice trade to take all the way back through to the next zone and probably the next one below that. Now that's the Globex chart. Also to look on the regular trading hours RTH chart, because I trade RTH, but I also look at the Globex chart. But it's important to also split out the auctions, in my opinion, anyway, to see any settlement gaps or range gaps, naked VPOPs, etc. Because at the end of the day, you're trading the cash market, you know, derivative of the cash market, and the overnight is purely driven mainly by you know, the European and Asian market sessions. Although at this time of year, because of the earnings season, you have got aftermarket trade in a lot of the large caps as well. So the regular trading hours, you can see the settlement gap here. We've got naked VPOPs below 1885. That's the closest, so you can see a touchdown there. And above, we've got quite a big settlement gap from Monday's move, which we rejected. Up here at 31 is the naked VPOP. So all levels to be aware of going into the day. Now, as you can see, this was my bull bear zone yesterday on the right hand side, the 31 to 33. And if I just go to the profiles next, have a more closer look. This was the reason why I had this as a bull bear zone. We look at Monday. Monday was value overlapping higher. We were left with a poor high. Now, as I pointed out earlier, the 1939.75 level is a 50% pullback of that impulse move. We just happened to one tip that. Coincidence? Probably not. Okay. I mean, we had the breakout above Friday's high, so you had some forcing action, shorts forced to cover, and you saw responsive selling once we touched the 50% mark, right back down to the VPOP. So the reason for that bull bear zone was really 31 was the VPOC settle, I believe, on Friday, and 33 being the, 31 was the VPOC settle on Monday, and 33 was the high on Friday. So really anything above there, we're looking for longs to start initiating positions and shorts to cover, certainly above this high volume point here as well. And below 31, I was expecting shorts to defend this area, and to sort of be more cautious really on longs. Although, you know, these zones I've highlighted were zones I was looking for responsive moves. So yesterday's trade, we can see opened at 1913.50 within the single prints of Monday's lows and excess. Now this was quickly rejected, and we had an open drive straight through this first zone into the second zone, and it did see a push through there into these single prints from last Thursday. And once we saw a little bit of stability here, we had a reaction back up, as we saw, to the top of this zone. This area became then a valid sort of fading point. As we can see on the right hand side, delta this whole time has been pretty negative straight out of the blocks. This is for the regular hours. Now once we've moved lower again, this 1909.25 became probably a valid sort of shorting area once we did bounce up into this point and got below again. The whole time value was clearly lower to the prior day. So ideally, we want to be trading with the direction of value. So begin to move down again into this single print area, and eventually down, broke through the open area. This was an interesting point yesterday. I'm sure a lot of people noticed this 1894 level. There was some, well, exceptionally large bid of about 5,000 contracts sitting there for some time, which eventually obviously got hit in large size, and there was quite a big counter reaction initially for that, and then flushed straight through back down into this zone, which, as we saw prior, was the balance area VPOC from last week. And yeah, small reaction back up into the close within Thursday's range. Just again, not showing. I mean, it was a sort of trending lower day, but didn't show great confidence on the downside. You know, as you can see, there's a lot of rotation back and forward. It wasn't a sort of true trend day, although we did, you know, have lower lows and lower highs, etc. Didn't show great confidence on the downside. And as we see on the right-hand side, a 2-minute chart of regular hours, you know, closer look at how this moved. We've also got the VWAP bands on here as well, just sort of giving us guidance intraday to the strength of the trend sometimes, or if we're in balance, it can be quite useful just for taking, you know, reversion to the mean type trades. But obviously we didn't have that type of move yesterday. Delta closed down 30-odd thousand, pretty negative, below VWAP and within this lower distribution. That's it for now. Be back with the pre-market plan. Thanks very much.